It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm David Ingles here in Hong Kong.
And I'm Avril Hong in Singapore. We're counting down to the open of markets in the Greater China region. Our top stories: Asian stocks rising to start the week as optimism over chip makers offsets fears over Iran and the continued closure of the Strait of Hormuz. DeepSeek previews the highly anticipated update to its flagship AI model powered by homegrown chips. We'll discuss how it stacks up against rivals OpenAI and Anthropic. Also on the program, a 31-year-old man to face court on Monday over the Washington shooting that was said to be targeting Trump administration officials, although an exact motive remains unclear. And we hear from South Korean Trade Minister Han-Koo on the government's efforts to reduce its reliance on Middle East energy imports.
Good morning. Welcome to the program. We start things off, and we thought it was going to be quiet. Some breaking news crossing right now. We were supposed to be talking about developments or the lack of it in as far as the conversations and negotiations between the U.S. and Iran are concerned. Now, we understand, based on this report just coming through right now as I speak, in fact, that Iran has now offered the U.S. a new proposal, Avril, to reopen that Strait, that they, based on how these headlines are phrased, it looks like that plan has been passed via the mediators, Pakistani mediators. This new proposal, we are seeing some market reaction already to this. I mean, we were looking effectively at equity markets sideways, slightly to the upside, but yes, we are looking at a pop right now. Avril, what are you saying?
We're seeing Brent. I mean, we're dropping below the 107 handle to around 106.50, right? So I think quite a clear reaction as far as these Iran developments are concerned. Of course, this is following on from a weekend where we saw Trump basically telling his top negotiators, hey, don't bother heading for those talks with Iran. So this is quite a turn of events. Of course, amid the geopolitics, we are also continuing to track what's happening this week. We have a big week in terms of earnings, of course, and this is a week where on the S&P 500, I think about $16 trillion worth of market cap, and companies linked to that market cap are actually reporting. So your Amazons, your Apple, Meta, Microsoft, right? And of course, they're also going to, I guess, confront the growth narrative that we've been seeing, very secular, that's coming through. So perhaps that feeds further into what we're seeing in the stocks climb in a week where we also have central banks on tap. This is a rare week, one in which all G7 central banks will be convening. So that's not something we see very often, and they're all going to have to confront, indeed, the war-driven inflation shock. David?
Yeah, they're likely not going to tell us everything is going to be okay. I think in the vocabulary of monetary policy, when you talk about the word stock, it's really stock of stockpiles, things like inventory of oil, and not so much the stock market, which has really, when you look at it on an index level, in fact, just another headline crossing, the MSCI Emerging Markets Index is at a record high right now. On an index level, it doesn't seem that the market is completely bothered at all by the lack of progress when it comes to Iran. In fact, just this latest headline alone, that there is a new proposal simply bolstering the equity side of the story even further, more than the reaction we're seeing in the energy markets, which I think when you look at it, tell us when we have a deal and then we'll take oil below 85 is, I think, fairly apt given everything else that's going on as we speak. But all that is to say, the earnings story will probably tell us a lot about this AI rally. The central bank story will tell us about the real economy and how those two themes converge this week. Will be really an interesting dynamic to watch as markets continue to hit new highs. We talked about Taiwan, 40,000, 3% to the upside. TSMC is coming up as well. Let's bring that up, guys, if we can. Of course, that removal in that cap on Friday really boosting that stock from 10 to 25% in terms of single stock exposure. And just to also mention the other big AI story, which is Samsung this week. So we had that blowout set of earnings, prelim earnings a few weeks back. The company will be breaking that down for us this week. and what really went into that massive number, 50 trillion. We're up 2% on Samsung. Okay, let's put all those things together for you. Joining us here on set, Charlotte Liang, our Asia Equities reporter. Why don't we start with the big earnings week ahead?
Yes, so it is an action-packed for Asia-Pacific earnings. You have the busiest week of this season with over 400 MSCI Asia-Pacific Index members reporting. And, all earnings season matter, but I think this one particularly stands out because it is the first window investors can gauge the impact from the Iran war. So some sectors that are in focus, including oil, defensive, that are seen as benefiting from the conflict, but also on the transport side, for example, airlines. There'll be a lot of attention on, for example, Air China's results, as well as what they're going to say given these Chinese airlines. They don't usually hedge their oil. And also you'll be watching how consumer companies, how are they coping with these raw material price increases. So a lot of attention will be on how their profitability will hold up. And if you look at MSCI Asia Pacific Index, the index gained 12% this year, outperforming a lot of the Wall Street peers. But now investors' attentions are all back into earnings, all back to the profit outlook.
Yeah.
So what the companies will see at these earnings call will really matter.
Charlotte, what else are we watching in terms of sectors in China specifically? I mean, we are hearing about some of these gig economy worker rules being formalized, and authorities also seem a bit more concerned about the finance industry, the so-called involution there.
Yeah, so I think for this week, earnings front, key sector to watch is Chinese autos. Obviously, investors are still busy concluding the Beijing Auto Show, but all the attention is now shifting back to earnings. You have sector bellwether BYD reporting on Tuesday, and also Geely reporting its aspiring challenger reporting on Wednesday. And so for Chinese auto sector, it's already pretty well known that the overseas growth is so strong, especially since the Iran war. You're seeing those showrooms, for example, in Southeast Asia bustling. But for these earnings, what matters is how meaningfully actually can those overseas sales cushion the domestic headwinds. So for BYD, we're expecting them to report a third consecutive quarter of decline in both sales and net income. And for Geely, even though sales is showing strong momentum, its net income is also likely to show a shrinking profit pool. So I think what this shows is that even the overseas story is so strong, but how much money does these Chinese EV makers actually make per vehicle? That will matter. And for domestic, you're still seeing price discounts for those new models. And if you consider the higher raw material costs, it is pretty significant pressure on their earnings. And Great Wall already had those results. And you're seeing, I think, the net income dropping to a 4-year low due to foreign exchange losses and some tax rebates. So BYD and Geely's earnings will have broader implications for the China auto sector.
Charlotte, you look at the benchmark. You talked about this. We're up, 12% this year on the Asian benchmark. It's very misleading to think that the economies are doing well. Talk to us about this piece you guys wrote on. This is mostly, if not all, AI.
Yes, so definitely for Asia, we're seeing the whole AI trade boosting so much of the index performance. And I think two markets that particularly stand out is Taiwan and South Korea. So you have Taiwan has overtook UK in terms of market cap earlier this month, and South Korea is just steps away. And if you look at it, it's mainly concentrated in 3 stocks: TSMC, Hynix, and Samsung, and that's mainly because of investors buying on the structural story for the AI, and then you will be needing these chip makers, memory makers to continue empowering it. So I think a lot of the concentration risk is definitely on people's mind. And with Taiwan's regulators just relaxing that single cap rule, that's for sure positive for TSMC and also some of the smaller stocks there like MediaTek, Delta. But that will inevitably, I think, make way more concentrated in these semiconductor plays.
All right, Charlotte Yang, thank you so much. Our Asia Equities reporter. Global stocks at a record, though fewer than 5% of the benchmark are actually at 52-week highs. Let that sink in. Right. Speaking of the change, and we talked about the delta there with Charlotte, just have a visual look at Brent off highs, S&P futures off the lows of the day in reaction to this Axios report here that this new proposal is on the table to reopen the Strait. What the two sides make of that, what the other side makes of that on the U.S. side of things is something, of course, we still have to wait and see. That's the news for now. Counting down to the open of trade, we are getting some more momentum going into the Monday session, Shanghai, Shenzhen. And here, in Hong Kong. The opening bell, 20 minutes away. Good morning. You're watching The China Show. Right, welcome back. So here's a look at the, I think busy is an understatement in as far as what is on deck this week. A lot of decisions, most if not all, I believe, are expected to, at least from the major ones, expected to not move on rates, but certainly it's going to be the context and how they frame, and it really is the incentive to sound hawkish, right? Does it cost anything to sound hawkish? At this point in time. Plus, of course, you have a lot of economic numbers set to come through as well. That's the macro story for you, and of course, gets us into the PMI numbers coming out of China later this week. The other thing to keep an eye on this week is his confirmation, of course, of the Fed chair, and of course, given everything else that's been taking place, you have U.S. Senator, of course, Tom Tillis says that he is dropping, of course, his opposition to Kevin Warsh's nomination as the next Fed chair. Now, he did say that the Justice Department's decision to end a criminal investigation into the current chair, Jay Powell, then removes a threat to the central bank's independence. Now, the move does set the stage for a faster confirmation of Warsh to succeed Powell, whose term ends in the middle of next month. Right, just a brief look at markets, bond markets specifically, right? Here's the global benchmark on the Bloomberg terminal. And as you can see, since the peak back right before the war started, and then you have all these stagflation fears sweeping through markets, hitting us towards the low side of things. We've actually recovered about halfway back on price on global bonds. Not all the way back, clearly, but we've recovered about halfway back in as far as the bond story is concerned. Going into April, a fairly consequential week for fixed income.
Yeah, as you said, recovering about halfway back, and it's also an asset class, right, fixed income overall, that has underperformed versus stocks, to some extent FX as well. Joining us now from Singapore is Rachana Mehta, co-head of regional fixed income at Maybank Asset Management. Rachana, good to have you in the studio on a day like that, because we are seeing further developments of these Fed succession drama in a big week for central bank decisions, earnings as well to some extent, and then these headlines crossing the terminal about Iran putting a proposal potentially on offer in a way that could perhaps give us a bit more conclusion on the war. How do you read this when it comes to global debt markets?
I think, yes, global debt market have not performed well this year, but if you look at in terms of credit market, they've at least still given a positive return. If you look at the Asian benchmark indexes, they are all up about 0.5% to 1%. Of course, we are expecting a solid return this year, thinking that Fed was going to cut 2 times, but because of the war, we have seen a pullback in fixed income. But I'm still positive that as long as you are buying 5 to 6 year bonds, you can still get positive return about 5 to 6% this year, just from a carry perspective, because the rates are still very, very high, correct? So generally when market looks at that, they say, okay, I still am getting a good return if I put in bonds. So that's what we are seeing it. But definitely in terms of duration, we've seen some volatility, whether it's 10 years or 30 years. But for personally, I am positive. I know a lot of people are talking about steepener trades, but for me, I prefer flattener trades, because I do believe that if central banks are hawkish, given higher oil prices, then investors will start looking at saying, okay, let us buy the long end, and long end still offers value. We have seen a 30-year US Treasury not breaking like 5.1, 5.2%. So as of now, it's still in a range. So for us personally, if it breaks about around 5.1, we'll start adding duration.
The thing is, we are expecting central banks to perhaps reiterate that, we don't know at this stage. The developments in the past 10 minutes or so just reiterate that point. So how much conviction can there be then in any part of the curve?
Absolutely, I totally agree with you. But at some point, you see, we have US midterm elections. So we have. I'm not sure that I'm 100% confident, but at least the war has to come to some kind of solution, maybe a ceasefire for the next 6 months or 9 months until, because I don't think this is going to completely get over, but at least we'll have some kind of solution between US and Iran and other forces in Middle East. So I do believe that, yes, you may not have a conclusion, but at some point there'll be demand destruction against inflation, correct? There's a big fight or a pull and push, whether demand destruction is going to happen. I definitely think that if next 1 month this Strait of Hormuz is closed, we are definitely going to see demand destruction in Asia, which may percolate to the rest of the world, whether it's Europe and US. So I feel that push and pull will keep the bond market where it is.
I'm glad you highlight that dynamic between US and perhaps Europe and Asia as well, because there is a sense that the US is a bit more energy independent, and because of that, does that also allow the Fed to be a bit less hawkish than other central banks? How does that perhaps affect the performance of US government debt versus what you're seeing globally?
Oh, okay, so far I feel actually everybody is following US debt market, but if you look at from Asian perspective, despite currency being weak, actually recently we saw Philippines raising rates, even Australia is raising rates, correct? So if you look at within Asia, as of now we are seeing that people are trying to keep the currency stable. So I do expect Philippines to raise some more rates, Australia also to raise rates. So from that perspective, I think our currencies are still, like last time in the crisis, our currency will weaken a lot more. But if you look at from an Asian currency, but they are holding at least better, and especially North Asian currencies like Singapore dollar, Taiwan dollar, renminbi also is a big thing which we have seen strong, correct, this year, despite the rates being low. So I think China is acting as an anchor for Asian currencies from that perspective, and that's why I think central banks are not in a hurry to raise rates. They're going to watch out whether it's Europe or whether it is some of the Asian central banks. So I do believe that yes, US markets have, like all the world have done the same in terms of the rate market. But I think from a long-term perspective, I think people start focusing on deficit, the fiscal deficit and the war cause for the US. So I feel that generally I do prefer Singapore dollar compared to US bond market because of safety and all. But given that 5.1% 30 years still looks attractive from a medium-term perspective.
For EMs, how ready are central banks there to act though? I mean, you raised the Philippine example as one. The next time they're meeting is in June.
Yes.
There's a lot that could happen between now and then. How ready do you think central banks would then stand to act? Are we looking at off-cycle if the need arises?
Absolutely, because I feel that, as I said, if the oil price continue to stay around 100, 110 range for the next 2 months, the nation central bank will have a lot more pressure to raise rates, correct? Because the inflation, yes, of course, it may be a short-term inflation with long-term demand destruction, but they still need to act in order to protect the currencies also, because Asian, especially Southeast Asia, correct, they are the most affected because we are the biggest importer of oil, whether it's India, Philippines, Thailand, even Korea to some extent, and Japan. So to me personally, they will be ready to stand and act. And Philippine Central Bank has come out and said they're ready to act even further raise rates. So I do believe that they will be ready to act if required.
Rachana, David here, just to maybe a follow on that. I mean, you and Avril touched on, I think, Oz, Singapore tightened policy, the Philippines, of course, somewhat surprised us. What is to say other central banks don't have a tightening surprise ahead? In other words, is the market underestimating the ability for these central banks to tilt a lot more hawkish, not just be on the fence, a lot more hawkish than is currently priced in these markets?
Okay, I feel that I don't think so. Like I know that initially everybody is telling that Fed is going to cut rates 2 times and then people change to hike. Now people are saying no hikes, no cuts, correct? It's very neutral in terms of curve. Even ECB after the oil price and gas price rises, I think market was expecting about 2 hikes. But after now they are saying that there won't be a hike this month, especially this week, Thursday's meeting. So I think market is also changing its perception. But for me personally, the longer this crisis and Strait of Hormuz is closed, yes, they may raise rates short term, but eventually demand destruction will let them to cut faster in 2027. So as of now, I think they cannot be as more hawkish, given that this is a short-term inflation impact compared to long-term demand destruction and consumption slowdown. So for me personally, I don't see they will sound a lot more hawkish this week.
Talk to us as well about central banks such as Japan's, which of course is meeting this week. There is a worry that they are behind the curve. Is that something that you're worried about as well?
Yeah, I think for Japan, there is a thing on currency also, because the currency is pretty weak. And actually, if you look at the wage pressure is high with oil price being high, I do expect Bank of Japan to raise rates. So I was expecting them to raise rates this week. But now, given the war, they actually postponing it because I feel that they may not hike rates this week. So yes, I definitely think that Japan is one country. See, RBA was much ahead of scale and they raised rates. So I do believe the Japan Central Bank should raise rates. If you ask me personally, they should raise this week, but I don't expect them to raise rates this week given the war situation, and they are more worried about long-term implication and demand destruction. So I think every central bank is watching, is this going to be short-term or is this going to be medium-term? Because short-term inflation impact markets can take it, but from a long-term perspective, demand destruction may. That's why I'm talking about this push and pull factor for central banks. It's not an easy decision for central banks.
No, I don't envy them. Don't want to be in that position. I mean, we're seeing the BOJ expectations being pushed out to June and later in the year, right? Rachana, great to have you in the studio with us. Thank you so much.
Thank you.
Rachana Mehta is co-head of regional fixed income at Maybank Asset Management. And we're counting down, of course, to the open of markets in the Greater China region. Here's a look at how things are shaping up for the moment. Plenty more ahead. This is Bloomberg. Couple of stocks we're watching in the session after the unveiling of DeepSeek's V4 preview version. We are, of course, on watch for whether there's further gains in some of these homegrown chip makers at the time where it sounds like DeepSeek delayed the iteration so that it could be more entrenched in the local chip ecosystem. Of course, watching some of these gig-related companies as China formalizes rules related to the workers, and potentially this could mean that they will have to align things such as pay, compensation with the labor intensity. So that's something we're watching across some of these firms in the session as well, David.
So there's a couple of sectors, right? As you point out, some of the platform companies. I think separately you had the PBOC coming out talking about competition in the financial sector, so certainly that's also one to watch. The tech bounds, relatively speaking, of course, we're flat in the early goings on the Hang Seng Index. Hang Seng Tech is up 0.5%. Now, just in terms of earnings, very, very quickly, we have about 100 companies on MSCI China set to report today, about 60 on the CSI 300. Lots more on the way. The opening bell is just ahead. This is the China Show. Welcome back. You're watching the China Show, counting down to the open of markets this Monday. And as you can see, we're slightly to the downside, lack of momentum, which is certainly not the case when you look at other markets in the region. Korea, the Nikkei, Taiwan, what do those three have in common? Really a big AI representation, at least the current AI darling, let's put it that way, really leading to gains there. But that is also just to say, when you look at the earnings story this week, AI is going to be featuring quite heavily. A lot of the Mag 7 is going to be reporting. It's a massive, massive earnings week here in Greater China, so we'll be tracking all the developments there. And of course, apart from that, we have some latest headlines, Avril, coming through on the Iran story in the last hour or so.
Yeah, said to be sending that proposal across. So maybe that informs the shape of the war. But to your point about AI representation, I guess it's worth highlighting we are watching out for Capricorn earnings this week, whether the global tech rally is helping and lifting some further investor appetite as well at a time where perhaps moving sideways on the mainland informs what you're seeing in that sort of dispersion. We are, of course, watching some of these other developments, including how China's tax crackdown has been jolting metals traders. And this is, of course, against the backdrop of some of these policy-making considerations, including on the vocalization, if I can put it that way, of Chinese authorities' worries over the finance industry and the sort of involution that we are seeing there. We are, of course, getting some of that data out of China as well. But let's take a look at how Hong Kong is faring. It's really that tech dispersion where the chip makers have been doing well. Don't forget that DeepSeek development on Friday. We'll talk a bit more about how that's being received, of course, by investors, this latest AI model. But aside from that, the investors into DeepSeek, Alibaba included, will remain in focus at a time where the gig economy related stocks are also on watch. So a couple of things we're watching in the session for now, David.
Yeah, absolutely. Of course, some of the other names as well here on the back of some of the sanctions. Hengli Petrochem is one we'll be tracking a bit later on as well. Okay, just very quickly, we're just getting some breaking numbers coming through. Industrial profits, so this is for March, and by virtue, you then have, of course, the year-to-date figure. Let me get started with year-to-date March. Similar rate of growth in any case, 15.5%. That's positive 15.5% year-to-date as of March. And for March, it's 15.8%, 15.5% rather year-to-date. 15.8% is the March figure. And I think in terms of just broad macro relevance, if you guys recall, right, PPI, the most recent numbers, positive for the first time in nearly 4 years. And these two things tend to mirror each other in as far as the wholesale prices, upstream prices are concerned. So, yes, there we go, 15.8% on that specific. Sorry. Okay, other things as well. Why don't we, April, let me send it back to you, I believe. I think we're also looking at other things here as well on the Iran story. And we do have this, we thought it was going to be a quiet day, but we have something to chew on here.
Yeah, I mean, to your point about the industrial profit rising, maybe that is a read-through from how the manufacturing base has in a way benefited from the developments related to the war, and yet more developments, right? We're seeing how Iran reportedly giving the U.S. this new proposal for the reopening of the Strait to perhaps end the war. Let's get the latest with our politics editor, Laura Davison, in Singapore. So, Laura, this line crossing the terminal, I think, less than half an hour, just over half an hour ago. How should we be reading this? Because we have seen these head fakes before.
Yes, well, despite sort of, talks seeming to stall out over the weekend, there clearly is some behind the scenes through negotiators in Pakistan conversations happening. We saw Trump allude to this proposal over the weekend. He told reporters that, after he called off a trip from U.S. envoys Steve Witkoff and Jared Kushner to go to Pakistan for the weekend, said that he had immediately gotten a new proposal from Iran, which he characterized as offering, quote, a lot, but not doing enough. So this is, kind of a new point here where we had, we're sort of in a moment where Trump has said he wants Iran to come to the table with proposals. We're now hearing that this is, kind of a part of the negotiations that are happening. But it's not clear at all that there's going to be major forward progress and, some sort of sit-down meeting here anytime soon. I'll note there's a lot that the president is juggling right now. Of course, there was some chaos at the White House Correspondents' Dinner over the weekend with, an attacker getting close to the president there, adding more security layers as U.S. officials travel overseas. Plus, the King of England is coming to the U.S. this week. Trump is scheduled to meet with Xi in China here in a couple weeks. We do know that Trump is sitting down in the Situation Room at the White House with some of his top officials come Monday. Axios has reported. So Iran continues to move forward, but this now is competing with other priorities on his plate.
That's a good point, Laura, because we are 3 months in terms of the closure on the Strait. It's worth pointing out, right? The fighting has certainly died down quite substantially too. What is the risk that Iran gets put in the back burner here, and as far as the other topics are concerned there?
There is a pretty significant risk here, just because, Trump has been known to, kind of once he's focused on issues, then move off them. It's hard to get him back focused on them. There are these other priorities, and there's no real key deadline here. Trump for a while there was setting deadlines. He wanted to see a deal within 2 days or 2 weeks. In this most recent sort of, moment, we saw him, extend a ceasefire, but without a new, fresh deadline. And so this means that there's not kind of a forcing moment here. Of course, there could be other external forcing moments, particularly as we've seen, the potential for global oil demand to crash, prices to continue to skyrocket, things like fertilizer and food becoming other pressure points. So there's some external forces here, but Trump sort of views this war as something that he is done with, and now it's on Iran's plate to figure out a solution here. And so he's less focused, which just means that this is not going to be his priority. He's going to be focused on more domestic issues, some political issues, and it just makes it all the harder to come to some sort of resolution.
Laura, thank you so much. Our politics editor, Laura Davison in Singapore. Let's check in on how Brent is faring because, of course, we saw a bit of that erasure of earlier gains following on from the proposal that's reportedly being pushed through by Iran. We are interestingly still seeing the July contract sitting above the $100 barrel handle. Let's bring in Stephen Stepczynski, who leads our Asia energy coverage. Stephen, things are changing fast and furious, but it's interesting the reaction you're seeing in markets, right?
I think the market is they want a deal. They're, when there's something coming through, I think you're going to see prices quickly deflate, and any headline or inclination that something could be done to unwind this war and turn the ceasefire into a real peace deal, you're going to see the market reactions. Now, that all being said, every day the opposite is true for Hormuz, because every day Hormuz remains shut. That is millions of barrels of oil that's not making their way into the market. And the difficult thing that the market has to digest at this moment is that there are only so many levers you can pull to kind of ease the current undersupply. So you've got a lot of storage that has been tapped either through strategic reserves that are already in certain countries, and oil that's been on the water. So you had India, for example, tap Russian oil that had been sanctioned. They got waivers from the U.S. and they were kind of taking that. You can look at that as storage that's floating. That all being said, those supplies are quickly depleting, and so that goes to the section where we have to go to demand destruction, where consumption actually has to drop. And you've already seen that happen in emerging Asia. Poorer nations are reducing consumption because prices are too high. If this continues for another few weeks, then you start to see potentially the more developed countries, Europe, the United States, and perhaps Northeast Asian countries really start to restrict how much they're consuming as well.
Yeah, I mean, we're 3 months into disclosure, Stephen, as you know, and you've been helping us track the story since day one. And I recall, in the early days of this, there were some announcements around strategic reserves being released. Countries had looked into their inventories and tried to figure out just what that inventory looked like to the extent of 35, 45 days. And right about now is where we are in as far as where those inventories should be close to depletion. What is the latest on supply? And where are those strategic reserves that were said to have been released weeks ago?
Yeah, I mean, so there were. Let me flip that, right? The market has lost, or it's set to lose, about 1 billion barrels of oil because of this, and what's been released is about half of that. So let's put that into context, and those releases are happening between the G7 countries. Japan has also done some other releases, so they've done some things to cushion it. But I think it just shows that 1 billion barrels just indicates how much has been lost and the scale of this. And according to analysts, we're going to a situation where we could start to lose essentially 5 million barrels of oil from the market on a daily basis. That's about 5% of global supply. So you need to do something to balance that market because it's not meeting the demand that's there, and that's where that reduction in consumption goes. I think what's interesting is you're starting to see the strain in the market more from the products now. So I'm talking jet fuel, right? You've seen, we've been reporting how all the airlines are either reducing flights in Europe, in Asia. They're increasing the prices of flights as well to deal with the higher jet fuel prices. Diesel, you're seeing Indian companies truck companies prepare for potential fuel rationing and also higher prices there as well. So we're seeing the products kind of show the pain first. There is oil available. There's still oil in supply. There's still oil in strategic reserves available. Will there be more effort to tap that? Will companies and governments look at finding other reserves that are available to use that? That's something that I think the market's going to be closely watching. But the fact of the matter is, that's only just one lever. It's a bandage. And if the Hormuz closure continues, then that's where consumption has to decrease. You're only able to do this for so long.
I guess governments that are looking for alternatives would include China's, and we are seeing how perhaps the refineries on the mainland are playing a bigger role. We're since hearing as well how Hengli Petrochem is opposing U.S. sanctions of one of its units. How is that shaking out?
Right. So they were sanctioned in a surprise move on Friday for taking Iranian oil, according to the U.S. That they deny that they're importing anything from Iran. But I think that this shows a really interesting point, because previously the U.S. administration had given waivers to allow for the Iranian oil on the water to kind of get through. But over the last few weeks, we've seen them tightening that supply, obviously to put pressure on Tehran. But, we've got the blockade. They've pushed, I think they've said that they've forced over 36 ships, Iranian ships, to kind of turn back and change course back into the Persian Gulf. At the same time, you have this sanction putting on a private Chinese refiner, them alleging that this is because of the connections to Iranian purchases. So the U.S. certainly is trying to tighten that. Of course, China on paper doesn't import officially any Iranian oil, but if you, according to analysts that look at ship tracking data, there are a lot of ships that are going on the dark fleet that are transferring the fuel to China via Malaysia. There are some ship-to-ship transfers that happen. But I think if you take a step back again, that's less fuel on the water. That's one more lever that countries had available to pull, whether it's through sanction waivers like in India or through the dark fleet that they could tap on. And with that fuel not available, again, that causes an issue for the market, tightens and adds to that bullish sentiment.
We are seeing the market reaction to the U.S. sanction. Petrochem Hengli is falling by limit down 10%. And to your point, I guess, as these countries run out of options, this is just going to become more entrenched the longer this conflict drags on. Stephen, always great to get your insights. Thank you. Bloomberg's reporter Stephen Stepchinsky, who leads our Asia energy coverage. Coming up, the latest on the Washington shooting said to have targeted Trump administration officials as investigators search for a motive. We speak to our correspondent who was at the dinner next. This is Bloomberg.
I don't know. It sounded to me, I read a manifesto. He's radicalized. He was a Christian, a believer, and then he became an anti-Christian, and he had a lot of change. He's been going through a lot based on what he wrote. His brother complained about him, and I think reported him to the police.
President Trump speaking with CBS 60 Minutes about whether he was the target of a gunman at the White House Correspondents' Dinner over the weekend. And the 31-year-old suspect is set to be arraigned on Monday. Let's get more with White House correspondent Jeff Mason, who was at the event. Jeff, first of all, really glad that you're safe and sound. You were in the room when this happened. How did things unfold?
I was, and thank you for that. The way things unfolded was the dinner started in a normal way at first. People attended receptions in the hotel prior to going into the ballroom. And to get into the ballroom of the Washington Hilton, you had to go through security or a magnetometer machine. The dinner, as I said, had started. We were on a salad course. There was not the opening speaker is the president of the Correspondents Association. She had made brief remarks, and then we began to eat. And during that short period after she had finished speaking, the sound of gunfire rang out. In my side of the ballroom, I could hear the gunshots, and others around me could hear the gunshots. And so we got down right away and took cover under the table and on the floor. That sort of had a ripple effect around the room as others either heard or saw how people were reacting. And then the Secret Service jumped right in and started going around the room and, of course, evacuated the president and the vice president and started then to evacuate the rest of the very high-profile members of President Trump's cabinet who were scattered across the ballroom.
Jeff, David here, I was going to ask you what the motive was on the part of the shooter, but I think that's clear. But what do we know about the shooter, and where are we in terms of the investigation?
Still learning details about the shooter. Right now we know that he is a 31-year-old man from California, who took a train from California to Washington, apparently took a room in the Hilton Hotel, and that's at least how it appears as though he was able to get his weapons into the hotel before bringing them down to the concourse level where the ballroom was, which is the lowest level floor of the space and of the hotel. The manifesto that you were mentioning earlier is revealing a little bit more about his motive and the intentions that he had, and the fact that he appears to have been focused, as suspected, on President Trump and members of his administration.
Jeff, it's really hard to overstate what an alarming state of affairs or situation this is, because it is potentially yet another assassination attempt on the US president, following on from a slew of political violence in the US. I mean, what's your read into this?
Well, I think you're right to note that the political violence issue and the problem of political violence in the United States over the last few years has only been growing. And you're also right to note that President Trump has faced now probably 3 assassination attempts, if that's what this was, that we know of. Other presidents have also faced dangers, but these have been very public and very noticeable. And of course, the one in Pennsylvania, Butler, Pennsylvania, where he narrowly escaped being killed. He was shot in the ear, and there were other people at that rally who were killed, was one of the bigger examples. This was just one more, and it took place in a crowded ballroom full of journalists like myself and public officials and others who worked for his administration. And of course, that raises the question about how that's possible in an area that should have been extremely secure, and B, why this keeps happening in the United States. And some of those are questions that are really impossible for me to answer, but are certainly questions that are being posed. As far as security is concerned, I would note that the president has been praising the Secret Service and the fact that they responded quickly and were able to prevent the man from getting inside the ballroom, as he clearly intended to get, and to prevent the violence that could have happened and more people, or anyone really, from being hurt.
Jeff, glad you're safe, sir. Thank you so much for the update there as well. Jeff Mason, our Washington and White House correspondent, of course, as he was just pointing out, he was, of course, inside the room when those events took place. We'll leave you with some live pictures at the White House. We have lots more ahead here on the show. This is Bloomberg.
Some corporate news this morning. China's central bank has repeated the need to curb involution-style competition in the financial sector, framing it as a governance and discipline concern. The PBOC Governor Pang Gongsheng says authorities should actively and prudently resolve debt risks tied to local government financing vehicles, while reaffirming a crackdown on illegal financial activity. The comments released Saturday followed an internal meeting. China has formalized new labor rules for gig workers, including delivery riders and live streamers. Major platforms such as Alibaba, Meituan, and JD.com must align pay with labor intensity, curb commissions, and improve working conditions. The rules also require greater transparency, algorithm reviews, and stronger oversight, with full implementation targeted by 2027. Nomura shares tumbled in Tokyo after fourth quarter earnings missed estimates, even as it posted a second straight year of record profit, fueled by Japan's market rebound. Net income at the country's biggest brokerage rose nearly 3% from a year ago. Nomura has benefited from volatile global markets and a boom in investing and deal-making at home.
With regards to the situation in the Middle East, if the supply chain changes significantly, then we will have to implement a structural change in strategy, and this could affect M&A activity in the long term. But as of now, we're not envisioning such a scenario.
昇するということは、今のところは想定はしてないところでございます。
Right. Just look at markets right now. So earnings, we talked about Nomura there. So Kian's actually one of them over in Japan, as you can see, 16% sensor maker. Limit up. And as far as that specific setting for the stock is concerned, some of the other AI plays are doing quite well, I think is an understatement. So this AI story continues. It's almost like this surfers are getting ready to ride this massive wave that's about to come through this week in the form of other AI earnings. A massive chunk, of course, of U.S. tech reports this week. Let's have a look at main chip stocks as well. Separately, of course, DeepSeek and the CCTV report talking about how the delay underscores the shift toward Chinese chips. We are getting the likes of SMIC up substantially. Maotai, cheers to the weekend, out with earnings on Friday, doing well as well, going into the first 25 minutes of the cash market session. Lots more ahead here on The China Show.
Welcome back to the China Show. Here's a look at the CSI 300 half hour into the session. We're seeing it mildly positive, about 1/3% higher. It's worth noting that you're seeing about as many stocks on the index up as down. And I think here is really a representation of, if you have tech, great for you, great news, right? Because that is really the sector that's been leading the region higher, especially when it comes to some of these other benchmarks across Asia, especially the TAIEX being lifted by TSMC. If we can take a look at how it's faring about an hour in, as we saw how Taiwan basically easing the single stock investment cap, and then this further tailwind from the Iran war developments. So you are seeing it really positive on Asia stocks overall today, especially the tech-heavy indices, on a day where perhaps the concern is still lingering on the real-world aspects, given how oil is still at elevated levels. I think we're still around the 105, 106 handle on Brent. You are also seeing these U.S. futures for stocks pointing to perhaps another positive session in a big week for mega cap earnings, David.
Yeah, and a lot of that will really tell us how much this AI rally, I think, in some ways justified, and I think we'll get a reset of some of these multiples this week. And I think a very good example of that, we'll get to Samsung. It's really Samsung, right? So when you came out with those earnings and that outlook, I mean, the stock suddenly went from 7 times to 5 times earnings. Yeah, I'm talking earnings here, not price to book. That's also just to highlight something that we've seen. We're almost about to wrap up April, and really this return of sort of the growth theme, growth factor, right? So growth is actually set to outperform value here in the Asia Pacific by the most this month in about 25 years or so. We're about 6 points in terms of that outperformance this year. So I think if you look at the markets that are set, this individual benchmarks that are actually set to do very, very well, I think, over the last month. And it just so happens that markets bottomed at the end of March, about a 1 month look. It's the Kospi, it's Taiwan, it's the Nikkei 225 globally that are, this is as of Friday, of course. So it's unsurprising that when you look at it on a sort of index level, Avril, one would think that all is well in the world. There is no war, there is no lasting long tail of the economic impact. But a lot of it, if not all of it, is really down to very few, very large stocks lifting very few benchmarks across the world. Avril.
Yeah, I think we have you to thank for this chart that's coming up on your screen shortly on the global inequality in equities, right? Because we are seeing here, I mean, the sense you get of how these 2,500 or so stocks on the global benchmark of the MSCI, we're actually seeing less than 140 of them trading at the 52-week high. So this is compared to roughly 400 that was before the war. So worth keeping in mind, even though we're seeing AI-related stocks going gangbusters, you can really see how not all stocks are created equal. Take a look as well at what we have on tap. We talked about some of the mega cap earnings. In Asia, BYD will be on watch as we perhaps ponder a bit more about how its market share may have shifted given these elevated oil prices. Aside from that, Capricorn, amid the global tech rally, the exuberance around chip-related stocks, and of course some of the banks as well in China that are set to report. They've been seen as sort of safe haven stocks in a way amid the turmoil. David?
Okay, yeah, why don't we start on earnings? Joining us here on set is our MLive macro strategist, David Savage. David, good morning. Nice to see you and hope you had a restful weekend. It looks like it's going to be a very, extremely busy docket on the earnings front this week.
Yeah, good morning. And I think that's exactly right. I mean, coming into this week, there was lots to be worried about. It felt like Groundhog Day again. We had concerns around the peace talks over the weekend, crude moving higher this morning, and then Asian equities open higher and then continue to run higher. And I think that shows that investors are facing two ways risk, right? That they got to be aware of what can go wrong, but increasingly what could go right. And today a lot's going right for Asian equities, right? We got some pretty positive earnings from some of the AI names in Japan. Yeah. We have Advantis later today, and of course a big week in earnings for the US as well. So yeah, should be a big week.
Big week for earnings, big week for central banks as well. So on that note on tech doing well and perhaps benefiting from the secular growth narrative, how immune are they to hawkish central bank narrative?
Yeah, I think that's a great point. I mean, as you and David noted, that a lot of the performance we've seen from equity benchmarks has really been driven by tech. And the rest of the benchmark is certainly not immune to the consequences of the conflict and therefore the pass-through in terms of what central banks start to signal this week. So obviously there's not a lot of expectations that we'd see changes in actual policy rates. But certainly, looking at the BOJ or the ECB, whether we get some more hawkish commentary and that starts to lift front-end yields a little bit more, is certainly a concern. And I think you can see that in the market too, right? Crude prices have moved higher again today. That hasn't held back equities, but bond yields have continued to stay elevated along with energy prices. And so I think markets are perhaps settling into a range where we have higher bond yields for longer and higher energy prices and crude prices for longer.
And is it maybe just a question on, we had this headline, this report, about an hour back from Axios, of course, that the Iranians have this new proposal. And what we saw with markets was clearly a positive reaction, and then we've started to pare back a little bit on price. Do you get a sense that markets are just done with this? Like, what will move the needle is a final deal.
Yeah.
And not so much a proposal helps, but not so much just a proposal.
Yeah, I think it's potential. I think it's also just the range, right? As long as the conflict keeps energy prices in a range, even if it's elevated, certainly tech stocks have shown that that's not going to disrupt this global AI capex story. If you look underneath the hood and look at some of consumer names, those sectors, certainly banks, and the pass-through in terms of what that does in terms of policy rates, and so there could be more of an impact, and that's where you see more of the swings when we see headlines come across that's either positive or negative on the conflict. And I think we also see that in fund flows too, right? Any flows, any benchmarks that or markets that have exposure to tech, we're seeing foreign buying in terms of those stocks. So South Korea, Taiwan, Japan, but elsewhere in Asia that don't have that lift, they're really seeing a lot of selling.
Okay, David, fantastic. For getting us warmed up for the week. David Savage there, guys, our MLive macro strategist here on set with us, getting us really set up for just a massive earnings week is really an understatement, and also on the central bank front as well. Right, just a glance at markets as we, glide into a fresh trading week. We're weaker in the Hang Seng. We're better on the CSI 300. We're even better when you look at some of the, as David was just pointing out, there are some of these benchmarks with really heavy AI representation. Lots more ahead. This is The China Show. Welcome back, and good morning if you're joining us developments across the region. Happy Monday morning. Right, so let's talk global trade, shall we? So the South Korean Trade Minister, Han-Koo, says the country is actually diversifying its energy sourcing. This really against the backdrop of what's taking place in the Middle East. In terms of cutting reliance on the country's dependence on the Middle East for energy, including things like cooperation with the likes of India. Speaking to us earlier on, he also says exports hit a record in March, led by the strong global demand for semiconductors.
I think overall, the Korea's export has been really robust. For example, for the last 10 consecutive month, the Korean export has been growing. And the last month, which is the March, our export hit the record level of $68 billion for the first time. I think it's really driven by kind of strong demand for semiconductors around the world. So despite some concern related to all the tariffs and uncertainty in the Middle East, I think the Korean export has been really showing robust performance so far.
Is there a risk that a lot of the materials, naphtha, rubber, resin, a lot of the things that could potentially go into the supply chains, especially around tech exports, will be hit given the ongoing conflict in the Middle East?
Yes, in fact, the supplies of the naphtha and these are being squeezed. So we are taking domestic measures to kind of restrain the export of this naphtha. At the same time, we really make all-out efforts to secure more naphtha from other region than the Middle East. Previously, 80% of our naphtha came from the Middle East. So we are exposed to this kind of potential risk in the region. And now I think diversifying is really a way to go. So now we are making all these efforts to find new alternative sources and partners for this.
Have you gotten any commitments from Asian partners? I know that you've been to India, you've been here in Japan, you're in Singapore right now.
Yes, the last week the Korean president made a state visit to India, and actually the Korea and India signed MOU on this cooperation in energy and this sector. I think all these other countries are also struggling with this shortage of naphtha and other the chemical products, but we are making efforts.
I know that you've had perhaps some concerns coming from Indian authorities as well about the SEPA trade deal and how balanced it is. Will that have any implications to how much cooperation you can get from them?
Yeah, I think we had this great agreement last week in India to really accelerate this upgrade negotiation for Korea-India, SEPA. I think we have really this great potential. I mean, our economies are complementary. A lot of Korean businesses in automobile, electronics, and shipbuilding, they have invested in India, and they are considering investing in India. So I think upgrading this almost 17-year-old, the framework of trade and investment will actually really boost further trade and investment between our two countries.
Minister, a key issue is also what's happening between the relationship between China and the United States. What do you hope to see or expect to see from the President Trump, President Xi Jinping meeting in May that could help potentially the global trade environment and what's happening between South Korea and these two partners as well?
Yeah, right now, China is our number one trading partner, and the U.S. is number two. But it's really kind of neck and neck. So I think it is in our interest to see that stabilization of this U.S.-China trade relations being, realized. So we hope to see that some more predictability and more stability could be secure through this kind of the high-level talks.
There you go. That was Sherry, of course, our colleague, just speaking about, I would say, just about 2 hours back with the South Korean trade minister there, who is, as you just saw, in Singapore, of course, visiting trading partners there. Okay, let's talk about this, right? The ever-shifting contours of global trade, particularly given what's taking place in the Middle East. Joining us here in set is Wendy Cutler, Vice President at the Asia Society Policy Institute. She's also a former acting Deputy U.S. Trade Representative, and she, of course, in her previous life, she also helped form things like the U.S.-Korea Free Trade Agreement. Wendy, it's very, very nice to see you. I believe you know the South Korean Trade Minister.
Yeah, we go way back.
Okay, so what do you think of the conversation, some of the topics that they hit? Does that seem representative of what's taking place?
Absolutely. I think all of our trading partners in Asia are hoping that when President Trump meets President Xi Jinping, that they will confirm the stabilization in relations. At the same time, the minister touched upon the economic fallout of the Iran war. And even though while Korea seems for the time being to be doing okay, the longer the war goes on, the more Asian economies are going to be hit. And not just in oil and gas, as the minister said, it's going to affect semiconductors and tourism and food. So there's a hope, I'm sure, in Asia that we can find some kind of accommodation in the Middle East as well. So a lot on our president's agenda.
Yeah, in 2 weeks. And by all indications, it does seem that it's still going to take place. And let's hope that continues to be the case after it got derailed the first time. How would you describe the relationship between China and the U.S. currently, following, I think, November in Seoul, in Korea, and then, of course, through the war and where we are right now?
I think both sides have made it clear that they're interested in stabilizing this relationship and de-escalating. But that's something that's easier said than done.
Yeah, I was about to say stable enough.
Right. And so I think at this upcoming meeting, they're going to try and extend the truce that they reached last October, which is supposed to expire in October. But I think there'll be very modest deliverables to kind of build on the relationship.
So in terms of deliverables, what can we expect from both sides?
So again, I think they'll try and extend the trade truce. I wouldn't be surprised if China announces some big purchases of U.S. agriculture and airplanes and the like. And then there's a lot of talk about this new board of trade where the two sides can work together to facilitate trade in non-strategic areas. So put aside semiconductors and critical minerals. Are there sectors where we can trade and maybe even lower the tariffs in those sectors?
Do any sectors come to mind?
Well, I think for the U.S., we would like to see increased exports of aircraft and aircraft parts, medical devices, and the like. And with respect to what we would want from China, I think it would kind of be the low-end stuff, the non-strategic stuff.
All right. And on the Chinese side, what do you suspect they might be asking for?
Well, I think that Taiwan will be front and center of all their demands, and that could even affect the trade, what happens on trade. I also think they're going to want to see the United States further relax export restrictions we have on high-tech exports to China, which I think is something that the U.S. is going to be cautious about doing.
Is there something there that you think they can hope for?
Well, again, maybe just kind of a standstill. That would be a major accomplishment. And let's be honest, during this standstill, each side is doing what they need to do to reduce dependency on the others in strategic areas. So stabilization doesn't mean a love fest. It kind of means de-escalate and each side do what you need to do in order to reduce your dependence on the other for these, for sensitive, high-end products.
Well, figuring out how to coexist, I think, is a way to put that. Has the Iran war injected any further complexity into this?
Well, absolutely. Look, it's taking the oxygen out of the room with respect to all the conversations our president is having with any other foreign leader, and I suspect that will also consume a lot of attention and discussion in the meetings with Xi Jinping. But at the same, and it will divert some attention to the other issues. But I also think that there's so many other items on the agenda of both sides that they're not going to let the Iran war crowd out those other issues.
The other aspect here is, and I think we touched on this earlier on as well, is that you have U.S. allies in the region that are dealing with the economic fallout of the war, and perhaps as a function of the unpredictability of the White House, they have become somewhat unreliable, and it pertains to some of the allies here. Is there some PR fix that the U.S. needs to embark on, some economic support that you think is to be expected from the U.S. to at least help its allies here mend the damage?
I think that would be a great idea. And I was just in Japan last week where the Japanese government announced a huge loan program to the Southeast Asian countries to help them get through this crisis. And I think that would be in order for the U.S. to do the same. I'm kind of unsure that that's where the White House is leaning. But I will say what Minister Yo said is accurate, that all of our trading partners, even close ones like Korea, are looking to diversify their trading partners and reduce their reliance on the United States because, regrettably, they think we are unreliable. And there's so much unpredictability in this relationship, so they feel like they need to turn elsewhere.
And is that something that we should expect more of in terms of whether or not we agree with the notion or the premise that the U.S. has driven U.S. allies closer to the orbit of China? That's just simply the economic reality of how things are going to be.
Absolutely.
Okay.
And I hear that from all of our Asian trading partners. Not only are they intensifying and accelerating their efforts to increase economic ties with other countries, but this is kind of their medium to long-term approach. It's not just what they're doing for the minute, and that should concern Washington.
Wendy, it was great to see you. Next time you're in town, let us know as well. Wendy Cutler there, folks, Vice President at the Asia Society Policy Institute. Right, we have lots more on the way here as far as markets go. We're in the thick of earnings season, lots in Japan, so we'll talk about that in a moment. Currency markets, risk on? Question mark, but yeah, maybe, okay, definitive. Let's put it as a statement right now. Risk on, looking at Aussie as we speak. Lots more ahead. This is Bloomberg. Foreign automakers once dominated China, but currently domestic names are stealing the spotlight. Stephen Engel reports from the Beijing Auto Show.
Here's a question for you from the Beijing Auto Show 2026. Is globalization over? Well, that's debatable, of course, here in the auto industry when you have a whole collection of legacy foreign car makers competing, of course, with the new entrants in the EV space in a highly competitive price war environment in China. The difference, I would say, is it's still a global industry, but the country that's in the driver's seat perhaps has changed.
For decades, foreign car makers flocked to China with the price of entry essentially being technology transfers to their joint venture partners. Fast forward to 2026, a reverse of that dynamic is on full display. It's the foreigners looking to partner for Chinese technology to stem the tide of their massive market share losses here. Hyundai Motor, for one, is launching its arrow-shaped Ioniq V with local partner BAIC. With autonomous driving tech from Chinese software firm Mehta and batteries from China's CATL. Volkswagen, too, has a relatively new partnership here and a 5% stake in China's XPeng.
Co-developing, co-engineering the ID Unix 08 and 09. It has all the bells and whistles that the Chinese EV buyer wants. Like here in the cockpit, for one, it's all the rage in 2026, and that is touchscreens from the driver's side all the way through to the passenger's side. Keep in mind, Volkswagen used to be the #1 top seller in China of passenger vehicles. They're up against it, though, but they decided China is too big to ignore. They're going to embrace partnerships with the likes of XPeng to recapture some of that lost glory. The legacy American car makers like Ford, also GM, I see Buick right over there, Cadillac's in another hall. They're also here at the Beijing Auto Show, facing the same headwinds, if you will, as the other foreign car makers in this hyper-competitive Chinese market, which is dominated by EVs and also a price war. And that begs the question, how are the Americans, like Ford and their Bronco, how are they going to capture the attention of the Chinese consumer? And how do they strike up new partnerships with the new generation of Chinese car makers amid the tariff regime in the United States, where they slap 100% tariffs on Chinese EVs shipped to America? Feature-rich and quick feature refresh are the hallmarks of Chinese EVs. Like Series, it's risen to the top of the ultra-luxury segment in China by offering a lot of funky options for its big SUVs like this, the latest M9. It offers refrigerators on board, karaoke systems, and this one, the headlights even turn into mobile projectors in color. They've also licensed technology for an onboard toilet for some vehicles, if that's your thing. For the multitude of domestic Chinese EV makers, it's all about grabbing attention while they're still alive. Because there's going to be a reckoning. With this price war, it's just the beginning of a weeding out period. So companies like this with the GAC, which is Guangzhou Auto, I'm not saying that they're not going to survive, but they're going to be one of the car makers that is going to be fighting for survival. Many people I've talked to here at the Beijing Auto Show say by 2030, so in just 4 years' time, there could be far fewer. We're talking from dozens to a handful of domestic EV makers by the end of this decade. Stephen Engel, Bloomberg News, the Beijing Auto Show.
Right, good morning. Welcome back. You're watching the China Show. So it's 11:29 in the morning in Tokyo, so that means we're headed to the lunch break there, and some on solid footing, 60,000 on the Nikkei. There's a massive earnings overlay in the equity markets in Japan. So we talked about Nomura earlier on. Lots of as far as the AI plays are concerned. I think Fanuc's also doing quite nicely there in Japan. Oh, by the way, it's BOJ week. Yay! They're not going to do anything. But let's see. They have scope to surprise if you look at past performance. Massive central bank week, I think one for every day. Massive in G7. In terms of earnings, flip the page, please. Let's have a look at how we're doing across the Asia Pacific. 1.4%. I think it's the busiest week for earnings here in the Asia Pacific. And as far as we can remember here, so you have the likes of Samsung breaking down their earnings story for us. There's a massive one coming through as well out of mainland China. I think BYD. Some of the big names coming through as well. If I'm just racking my brain for statistics here, I think about 90 or so companies on MSCI China are reporting this week. 60 plus, you have an overlap between that and CSI 300. CSI 300, about 60 plus are reporting this week. Just to say, of course, it's going to be very, very busy the next few days or so. Okay, let's talk about Chinese pharma, shall we? So in our China Decoded segments for this week, in fact, it's really about how China has really closed the gap, if not overtaken in some cases, the U.S. in terms of biotech and pharma research. In some cases, as we were just pointing out, it pulled ahead. The proportion of studies being conducted by Chinese scientists has surged, accelerating the development here of new treatments and reshaping the global drug pipeline. Joining us here on set is Juliana Liu, our Bloomberg opinion columnist, who thinks that China's dominance in the sector is just beginning to join us right now. And you wrote a column about this about a week back, if I'm not mistaken. Take us through the thesis of the column.
Yeah, so essentially, what we often look at is out-licensing, right? The actual money that gets passed between the Chinese developer and the overseas kind of pharma company. And these numbers have been soaring. I think last year they were at 100 billion out-licensing. But what was really interesting to me about a study that was published recently in JAMA, in that prestigious medical journal, is that these researchers at Georgetown, what they looked at was instead early-stage research and development programs across the world, not just the U.S. and China, but really the rest of the world. But I think what's become really clear when you look at the chart is that it's really now about the U.S. and China. Other countries obviously are still involved in R&D, but the number of studies, it's just not matching. China has really zoomed ahead when really nobody was watching. I don't think that the world really has a sense of how much China is contributing to R&D in pharmaceuticals. We talk a lot about other subjects, chips, EVs, AI. Right. People aren't paying attention to something that's actually very fundamental to their health and their quality of life.
And it's something that could be apolitical as well, right, in terms of regulatory risk, because this is something that obviously helps. Doesn't matter what passport you hold, right? You're still a human being. So how does the data inform you about, in terms of the pipeline of drug launches, for example, new drug launches?
Yeah, so what this study shows, what it suggests is that in terms of early research and development, this is increasingly happening in China, and they didn't supply full year 2025 data because the study was just published, in March. But it looks like China has overtaken the U.S. in terms of the early R&D programs that they're looking at. And you can see where the momentum is going, right? The momentum is really going one way. So China is likely to be the originator and increasingly the dominant originator of R&D pharma projects.
Fantastic. Juliana, thank you so much. Juliana Liu there, guys, our Bloomberg Opinion columnist. You can check out her columns, of course, on the terminal for our Bloomberg clients. Why don't we further that conversation on pharma? How we got here, what's ahead, what the major challenges and risks are, what does a fundraising environment look like on the private side going through all the way into the IPO space. Joining us here in set, Rebecca Liang, Senior Analyst for the Pharma Industry at Bernstein. Very nice to see you and good morning.
Good morning, David. Thank you for having me.
So, very good point that Juliana just made, and I'm sure you heard it, that a lot of people were not paying attention, and then suddenly they're now looking at China leading across many of these fronts. How do you think we got here, quite quickly, and do you think there is enough momentum to sustain us over the next few years?
Right. So the pharma industry in China is quite new, actually. So it spent the last decade or so trying to catch up to global standards.
Okay.
Now we see that instead of catching up, the industry is maturing and the product quality is improving in many areas. It's actually leading the curve. So China has now close to 5,000 clinical programs, and these account for about 40% of the early drug pipeline globally. So as Juliana was pointing out, China and the U.S. are now the two major players, both contributing about half to the global drug innovation and R&D efforts. Yeah.
And just in terms of domestically, what are the fastest growing segments, whether that's oncology, cardiovascular, autoimmune, just in terms of your coverage, what seems to be the biggest driver of growth right now?
Oh, definitely. So the top therapeutic areas are oncology as well as metabolic diseases. So we do see China has this advantage of engineering new drugs on top of what's already there globally. So that means that in some new modalities, like bispecific antibodies and antibody drug conjugates, these are the up and rising modalities in oncology. China, because of its engineering advantage and its general advantage of just doing many more trials faster and cheaper than global average. For example, we see that the early development in China from preclinical research to the completion of phase 1 typically takes 3 to 4 years. And this is about 50% faster than the global average. So now we have a pipeline boom, IP boom in China. Therapeutic, oncology drugs are the top areas.
Can I ask a stupid question? Why is China so fast in being able to get through most of these processes?
So macro enablers are definitely important. So we always have favorable policies. For example, the recent 15th five-year plan identifies healthcare as a pillar industry. Besides that, you also have the vast and aging population. In China, clinical trials, the big speed up is in patient enrollment. And because you have such concentration of hospital sites and patients in top-tier cities, you are able to recruit patients a lot faster. So I don't think it's one factor. It's multiple years of incubation and just gradual maturing of the industry.
Okay, let's talk about your top picks.
Right.
So how do investors get involved here?
Interesting. Last year it was all about sector beta. So
by the index.
The out-licensing trend really drove up lots of stocks. I think this year we're back to a more reasonable valuation level. And now stock picking, company alpha is more important. So we like companies that have a fast-growing pipeline, can sustain the out-licensing deals. But more importantly, after the deals, we want them to be able to deliver in the data front. So what we mean is that the assets, once they're with the global partners, they're subject to further global testing and also FDA reviews. So eventually it's the cold, hard clinical data that would determine whether the assets have a chance to succeed commercially at a global level. So our top pick, like Innovent Biologics, a maturing biopharma that's transitioning to a global level biopharma, and also Hengrui, which is a very successful example of a traditional, more generic-heavy company that's able to phase out their legacy products and replenish with lots of innovative drugs. So those are examples that are, on the one hand, delivering good growth domestically in their business and also having a healthy pipeline. And this year, we see lots of clinical catalysts for the companies, where they will be presenting at major global conferences with their important data. I think those could be very stock-moving.
I mean, in terms of what the challenges are, I know that sounds like a very generic question, and no pun intended on the pharma angle there. But if everything seems to be in place very slowly over the course of many, many years, what could disrupt simply just the beta trade here? Let's talk about that before we talk about idiosyncratic risks to companies.
Yeah, I mean, we see healthcare actually as in the capital market, it's constantly getting in and out of favor. Right? So you have about a 3-5 year cycle. Last time the valuation peaked around COVID times, around 2021. And then because that back then lots of companies got listed on Hong Kong Chapter 18A. And so lots of fresh new capital went into the sector. But soon people realized that the global competitiveness was not there yet. So even the so-called innovative drugs back then were more like copycat innovation and not truly having or able to make a dent in the global market. So because of the oversupply of very similar drugs, I think you saw the valuation tank, and we actually had a pretty prolonged bear market for the past 2-3 years. But recently what changed is that the innovation level is elevated already, so that we now do have assets that are competitive globally. So the global story is a lot more solid today compared to 4 or 5 years ago. That's why you see the return of investors, especially generalists, last year. They're waking up to this trend of out licensing, but it's actually not a one-off phenomenon, right? So it's actually years of incubation and structural growth for companies who were able to survive the funding shortage in the last few years.
Does the out-licensing trend, does that continue, you think? And just in terms of fundraising, since you brought it up, what type of fundraising do you think we'll expect, both in the private and public markets this year?
Sure. So first of all, the out-licensing does continue, something very structural. So last year we had about $130 billion total out-licensing value, more than doubling from 2024. So it was already a phenomenal year. But this year, in year to date, we have close to $60 billion already.
Year to date.
So it's something that's, the momentum is still quite strong. But I do think the capital market is getting more difficult because last year, investors do react to those deals. You see a mega deal announced, and it immediately sends the whole sector up. I think this year it's going to be more on delivering on the deals that already have been made, having good data presented for those individual stocks. Right? So investors are now looking for the next phase of globalization, which is you're able to get the data through and get through the regulatory bodies, the FDA, EMA, etc.
Yeah, I think that's the point you made about 2 answers back, and that's something to watch this year, right? My final question is this: what is happening reminds me of the China's car industry 2 years back, where, as an example, right? So the cutting edge technology on batteries, electrification, and all these things, where clearly, if you wanted to pick the dominant players, you'd have to pick a Chinese player. But what happened was now we're suddenly stuck. They're all competing with each other now. What is the risk that these Chinese drug makers, who are at the forefront of the development curve, start competing with one another, and that becomes just market negative for the trade?
Yeah, I think that's something inevitable. So as they mature, they are now vying for the global market. And we know that typically for pharmaceuticals, for each class of drug, you have the space for 3 to 4 players, where the top player typically gets more than half of the market. Right? So eventually, it is, it's a very it is competition. Defining the word. But what we see is that these Chinese players, they are just beginning to get to that position where they're able to go into the top 3 or 4. So I think for the top companies, there's still a lot of growth and alpha in the future, because this is something that at the moment is still not. It is not in their P&L, right? So it's something complete, incremental growth to them.
Okay. Yeah. It's crazy to me that not a lot of people are paying attention to this. But maybe after this, we'll see. Rebecca, thank you so much. Rebecca Liang there, guys, senior analyst for the industry at Bernstein there. By the way, if you like that, you liked our conversation with Juliana or some of the other stuff that you might have missed here on shows today, so you can check it out on our new video hub. So for subscribers, you can check out live streaming news, interviews, as we just touched on there, and all of our Bloomberg TV shows. Check it out. All you need is an internet connection. Bloomberg.com/videos. This is The China Show. Welcome back. When the chips are up. There we go, on your screens. A social media account affiliated, we're talking DeepSeek now, by the way, affiliated with Chinese state media, talking about DeepSeek and the delayed release of its V4 model, pointing to, the report says, to a shift toward deeper integration with the chip ecosystem in China. Now, the startup, in case you missed it, by the way, on Friday released this preview versions of its long-awaited new model, but Bloomberg Intelligence thinks it actually fails to narrow the gap with leading U.S. products thanks to access to advanced NVIDIA chips. Robert Lee, author of that report, joins us now to talk us through. I think we've been spoiled because of the initial DeepSeek moment. This is 1.5 or 2. What do you make of this?
Okay, well, compare and contrast to last January when DeepSeek made the big splash. It was off most people's radar. That isn't the case this time. So the new model has been well previewed, well trailed. Its performance and the characteristics largely met with expectations, so hence the lack of major surprise. But where it does lead is in terms of its, again, forging ahead and pushing the barriers in terms of cost down and software optimization, which is the key strategy that China as a whole is pursuing at the moment. And I think the most interesting thing about it, as was detailed in their accompanying white paper, is that the model was trained and developed almost exclusively on Huawei chips. So again, highlighting China's ongoing push towards semiconductor self-sufficiency and reducing any reliance on NVIDIA, etc. So therefore, the chance of China taking whole-scale orders from NVIDIA going forward, as we've been writing over the recent months, is probably pretty limited.
Well, I think you highlight a good point in terms of how we need to be looking at how this one pushes the boundaries. Is it more on, to your point, cost, or is there something here on the tech side that catches your eye?
Well, as you said, very kindly in the opening quote from our report, China lacks access to leading-edge NVIDIA chips. Therefore, its ability to compete in terms of frontier model development is, they're on the back foot. And they're not trying to do that. So they're tying in with the government's national strategy to proliferate AI across the entire economy, across every segment and every province, which is defined by what's referred to as one of the government's major white papers. So the focus for Chinese companies, including DeepSeek, is really on efficiency. It's by using clever software optimization techniques to squeeze more performance out of what they have at the moment. And I think if you look at the characteristics and the technical competency of that model, that clearly illustrates that China is developing, I think, a real lead in software optimized models and in cost down. And if you look at the pricing in terms of token pricing that they're charging external clients, they're still, compared to the leading Anthropic models, they're an approximate 80 to 90% discount. Now, I would suggest that the pricing is a loss-leading price. There's obviously some degree of subsidization going in there. But they're also benefiting from this cost optimization, which allows them to push ahead in terms of pricing. So, China is clearly emerging as a global leader in software optimized models. It lacks access to NVIDIA, and therefore its ability to compete on frontier model developments is curtailed. So the strategy, given the constraints they work within, is, I think, the right one.
Yeah, just a mental exercise. If they had access to those chips, do you think we'd be having a different conversation?
China's got huge strengths in software development. It's home to some of the world's largest software companies, Alibaba and Tencent. The technical barriers to entry in software are much lower. Compare and contrast to something like semiconductors. The capital costs as well to start a software business are relatively low. So China's trading on its strengths there. Yes, if they had access to leading-edge NVIDIA products, then sure, I'm sure. But if you look at some external benchmarking data, and this is coming from the US, a site called LifeBench, the leading Anthropic model is only, in terms of its performance premium, the premium's only around 10% at the moment. So it's not to suggest or in any way that China is miles behind. It's competing neck and neck with the US, although the US is still likely to maintain some limited technical lead.
How much does the cost advantage help further AI adoption in China? Because that could be the strategy.
Well, I think this is going back to first principles, the generic internet model. Build your user base, try and squeeze out the competition, either give your product away for free or at a very low cost. And then once you gain critical mass, then you can focus on monetization. So I think that's the generic internet model that most of the Chinese companies are playing at the moment. The problem is, whilst there's a great track record of companies gaining success, I mean, that's what Facebook and others did in the early days. The problem is at the moment, all these Chinese firms are employing the same generic model in a very fragmented market, in a market where it's very difficult to gain any sort of sustainable competitive edge. And as a consequence, the market is very fragmented, flooded with supply, and none of these companies are making money at the moment. So really, I think ultimately who wins will come down to who's got the biggest balance sheet and who's got, long-term staying power. The other thing that needs to happen in the industry, sure, they can look to, drive penetration in the market by offering very low pricing at the moment, but ultimately pricing, as we're seeing, has to come up because it's unsustainable economically.
Yeah, commercially. Yeah.
Or commercially, I should say.
Robert, thank you so much. Robert Lee there, our Bloomberg Intelligence senior analyst. Right, we'll be back with a quick market check. This is Bloomberg. Who said Korea was just all about memory, right? It's spreading. The love. Your power equipment makers are seeing this rally taking place. By the way, Saturni's out again with his research called Moving the Markets on that specific one. If that makes you curious, you can read all about it, of course, on the Bloomberg terminal. And also other things moving these markets. Speaking of the usual names, seeing some upside here today. So TSMC following that massive move on Friday. Similar move today of about 5%. It's 10% for a stock this big. I think you can make a similar argument, really, when you look at Samsung and SK Hynix. 6% and 2% to the upside. It's worth pointing out, though, they did seem to be going the opposite way of each other in the early innings of the trade today. At SMIC, we talked about this with Robert, in case you missed that, on the DeepSeek moment. Well, 1.5 moment, if you think about it that way. Just now here, 4.4% here. On that specific story. Okay, just before we wrap things up, an update here, somewhat of an update on Iran, and Axios reporting here that this new proposal is on the table from the Iranians to reopen the Strait of Hormuz. Still some gains in the energy markets. That's it from us here on the China Show. We'll see you all tomorrow.